Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has seen an explosive breakout of 89,000, resulting in a rally right into our next weekly resistance at 93.6 to 94,000. Seeing some short-term indications of weakness here with a negative momentum shift developing and of course bullish exhaustion signals printing. The big question is, as Bitcoin approaches our prior weekly low, will Bitcoin continue upwards in the macro? Or are we going to see a short-term pullback? And if so, what are the macro implications of that? Before we get into today's video, go ahead and smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, click the pinned comment, contact our admin to join our VIP channel. You can also find a 50+ month trading track record by clicking that first link, or a 10-minute video showing you inside the channel by clicking the second one. You'll get access to trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats, from the general chat to the trading chart and education chat to the daily video, the help, the community trade setup chat, and everything else we have to offer. Go ahead and check it out and we'll see you in there. Let's take a look at the price action. So over the past 24 hours, Bitcoin has seen, finally, the breakout of the 89,000 major level of resistance. The resistance we have been discussing now for many weeks as the trigger point that needed to break to facilitate essentially the next leg toward the upside. We discussed in yesterday's video what that breakout may look like, and we have seen the price actually continue upwards almost identically to what we expected. A break of the 89,000 level resulting in a large and volatile move as high as 94,000. Retesting this upper level of liquidity, our buy side liquidity, at 93.6 to 94.6, which directly lines up with a critical level on the weekly, that being the prior weekly low of the macro horizontal consolidation prior to that 15% red weekly candle. We are now retesting this level on the weekly, providing not only an area of potential resistance, but yet again, another trigger point. So we're going to be taking a look at both the macro, going over the bullish scenarios, the bearish scenarios, the breakout, the expectations, the macro implications, and the short-term charts, but of course, everything you need to know from a contextual standpoint. So before we go ahead and jump into all of that, guys, let's start on the market data, the DXY, and the S&P 500. The market data, 24-hour volume down 3%, 312 billion. Liquidations down 40%, 369 million. Of the 369 million in liquidations, 161 million coming from longs, 208 million coming from shorts. Again, a very volatile 24 hours. The DXY has rallied back up to retest 100, which is the prior horizontal low, but we haven't seen the price break through that region yet. Now, while we remain underneath this region, this very well could just be a support resistance flip before we see a consolidation continuation lower. This is still the expectations for around 6 to 12 month period. Provided interest rates do drop, we will see the DXY likely fall down. If we do see the DXY break through 100, particularly the prior change of character, we could see this marked out as deviation before a continuation back to the 200 moving average, but we do have to keep in mind in 13 days time, we have got our interest rate data, which will play a massive role in determining where the DXY is likely to move, especially based on what Jerome Powell says in that Federal Reserve press conference. Moving over to the S&P 500, we have seen some good things happen here on the S&P 500 from a technical perspective, but from a structural perspective, we're not quite there yet. If we're taking a look at our structure, we of course have got this overall downtrend with our initial high at 6,100, our lower high at 5,800, and our most recent lower high at 5,500. So we do have this laddering down effect here with these lower highs developing. While we have the price action underneath a most recent lower high, the expectation is the price action is in a bearish trend and will likely continue lower. That is the expectation. But the probabilities are beginning to shift in favor of a continuation upwards now that we have seen the first bullish sign, which is a positive momentum shift on the RSI. If we take a look at these prior highs and lower highs, every single one of them lines up with a critical retest of this RSI trend line, and we have seen a breakout. So the momentum shifting positive here may be a leading indicator that the price action will follow suit. It is not necessarily always, but it may be a leading indicator. So something to keep your eyes on. This could be an indication that the S&P 500 may rally into the rest of the week or into next week. However, the expectation should still be that we will likely see a continuation lower if we fail to get over 5,500. From a higher time frame contextual point of view, we have got our daily highs at 5,500 and our daily lows at 5,000. Excuse me. So any sort of price action between 5,500 and 5,000 should be considered normal and healthy price fluctuations on the higher time frame. Just as 89,000 was the trigger for a strong continuation upward for Bitcoin, the 5,000 level is the trigger for a continuation upwards for the S&P 500. So while we remain underneath that, we are not expecting that per se. Same goes with the weekly low here at 5,000. Only upon the breakdown of $5,000 would we see the next leg down initiate for the S&P 500, and that essentially mimics that Gaussian channel and 50 EMA on the Bitcoin chart, because only a loss of both of those levels on the weekly initiate that next leg downwards. So we have some key confluence points there we can look out for. That is it for the S&P, guys. That is it for the updates. Let's go ahead and jump into Bitcoin. Now, before we do, if you were interested in supporting the content and supporting yourself in your trading journey, sign up to BitGet, BitUnix, or BingX with the links down below. You'll get a lifetime trading fee discount of 15% of all your trading fees, which can build up to 45%. And you'll also support me making the content and support yourself trading on an exchange I trust. Check out the ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump into today's video. Now we have a whole heap to take a look at today's video. This is going to be a very in-depth and very large analysis, because we have heaps of different things to be taking a look at from the short term, the macro, the technical levels, prior historical levels of significance. The list goes on. So let's just jump right into it. And let's talk first and foremost about the breakout of 89,000, the short term, and the macro, and then jump into the next points. So the breakout of 89,000, of course, happened over the last 24 hours. The $89,000 level had been a level of resistance essentially beginning around early March 2024, so a little bit over a month. And we saw the breakout happen yesterday, and the breakout was very volatile. The breakout resulted in a very fast and very aggressive rally right into that next level of weekly resistance, which lines up perfectly with our prior weekly low. We'll come back and discuss the weekly low in just a second for those of you who are not familiar with that level, as we discussed that level massively back in February this year. We've come back and retested that weekly low, which lines up perfectly with a short-term buy-side liquidity level, as we can see marked out on the chart here. If we take a look at our expectations from yesterday's video, we showed you this chart, which was if we broke through 89,000, we would see a violent move toward the upside, reaching 92, reaching 93, and potentially a high just over 94,000, and we have since seen that play out absolutely perfectly. Now, on the short term, we are beginning to see some signs of exhaustion for the first time since we have broken through 89,000. Now, we have to remember the context behind potential pullbacks here, because if we look at the higher time frame chart, the expectation is that we are bullish, right? We have broken through the weekly RSI, we have broken through the weekly downtrend, and we have broken through 89,000. We have to identify that the target of all of those things occurring was, of course, the next level of resistance at 95,000. So essentially, we have reached the minimum expectation of the breakout of 89,000 over the past 24 hours within a one-day period. The expectation was that we reach the prior weekly resistance at 94 to 95,000, which we have done so. The question now is, are we going to see this continuation upward sustain, facilitating a move higher, or are we going to see a short-term pullback? And if we do see a pullback, what potential implications may that pullback have on the macro chart? So we can see how this video is going to be quite in depth because there's a lot going on from all different angles here. So let's first and foremost take a look at this chart here. This is our short-term chart. It's going to be the easiest to explain because there's not really much going on over here. What we have seen is the price rally up into a next level of resistance, which we have marked down now to be our buy-side liquidity, as well as 93.6, which will draw a horizontal leveling right over here, lines up with the weekly low of the prior macro consolidation. So at the moment, while we are sitting below the week high and the weekly low, the expectation is we have moved into a level of resistance after a significant rally toward the upside, which opens us up to a potential short-term pullback. As we can also see, we have had a negative shift over here. This is a representation of weakening bullish momentum, which may spill over into RSI breakdowns or negative momentum shifts. With both of these things occurring, the potential for pullbacks to develop from this range begin to increase. Now, here is the most important information. Even if we see pullbacks develop, we could go as low as 89,000 and still remain bullish. The reason being is because prior macro trigger points, prior macro resistances become future supports. And provided we sustain above 89,000, the expectation is that we eventually see continuations upwards. It is only if we drop below 89,000 do we run the risk of then pushing back into the Gaussian channel and the 50 MA, which we'll discuss later in today's video. So if we're taking a look at our macro chart now, the expectations are, of course, that we have an overall bullish narrative here confirmed by the break of 89,000. Now, this isn't something new. The bullish narrative isn't something that's just been pulled out of the air. If you even take a look back at our videos and take a look back at our channel, again, we talk about everything. You can go back and check everything I've said. You can fact check every video, every word. People are too lazy, but you can. If you go back to when we're at 79,000, 76,000, 12th of March, I said, quote unquote, call me a freak, but I'm starting to get more bullish and bullish here. And I've said I'm more bullish here at 76,000 than I was the entire time above 100,000. A lot of people like to think just because you bring forward and identify and plan for potential bearish moves that you are bearish. That is not the case. You can objectively speak about a potential move occurring without necessarily believing that move is going to occur, simply for the sake of planning and preparing. We've said numerous times over the last 2 months that only upon the weekly breakdown of the 50 EMA and Gaussian channel upper band will we see the next leg on the macro downward resume. And we actually still stand by that. Only when we see the weekly breakdown of the 50 EMA and the weekly Gaussian channel, and we can also throw in the baseline, the 2-week, when we see these levels lost on the weekly, that is when we will see a macro continuation lower, potentially to 55,000, not a second before that. And while we now remain above 89,000, the potential for this move diminishes more and more and more as we have now developed a higher time frame level of bullish support. So the worst case scenario on the short term that I see is the price action corrects toward the downside, retesting 89,000 before we then test this as support, and hopefully we do find that as support. Now, there are a few different options that could develop here on the short term, which will impact the market as a whole. Number one, we could see the price action corrects short term, and if we do see that and Bitcoin dominance actually drops, what we may see is the total market cap will more or less sustain, facilitating the altcoin market to continue upwards. So we'll actually see a small amount of money rotate into the altcoin market and out of Bitcoin, facilitating the market, the total market cap, to remain more or less neutral even when Bitcoin sees a short-term pullback. That would be a bullish scenario. Bullish scenario number two is that we absorb the short-term developing weakness at this level of resistance, which we'll discuss in a second, which may facilitate a continuation back toward the upside. Again, for that absorption over here, we need to see the weakness developing on the short term begin to be dissipated. We need to see the buyers remain strong and step in even as this momentum begins to decrease. We are not quite yet seeing that in reference to the RSI. We still have this overall downtrend here on the 30-minute on the RSI, which we would like to see break. If we do see this break, there is a chance we will then see another move back into 95,000 instead of breaking down over here. So we need to see some more buying pressure develop at these ranges and really absorb that selling pressure that is beginning to step into the charts. Okay, so those are the bullish case scenarios, guys, but this doesn't really cover the main thing. And the main thing is that we are coming up now to retest a very important level of historical resistance. And this is going to be that weekly low on the weekly chart. Now, a lot of you have been following me since, February and much before. Some of you are newer to the channel and haven't maybe even heard about this level, but we were discussing this for a very long time, all the way back in January, back in February, and even at the start of March. This is going to be the weekly horizontal highs and lows of this horizontal consolidation we had above the 93,000 region. Our weekly low was sitting at 93.6, which is the exact level we have come up to retest again, and our weekly high is sitting at around 104.4. We can see here, this weekly consolidation lasted around 2 to 3 months. And when we broke down from this weekly consolidation, we saw the first time a dramatic 16% wick, and the second time a whole entire 15% candle 2 weeks back to back. So we know that this level here has had significant impact on the price action historically, and therefore it is not going to be a level that we are going to ignore or take lightly. This is a very important level. Prior historical support becomes future historical resistance. Just as if we go to the daily historical support over here at 89,000 became prior historical resistance, this is going to be the weekly respective level. So the weekly level of resistance we need to break through to facilitate a continuation upwards. So we're looking contextually at Bitcoin. Contextually, Bitcoin is more bullish than bearish above 89,000. We only trigger the next macro leg down if the weekly Gaussian channel and 50 EMA is lost. For that to occur, of course, Bitcoin will need to lose 89,000, which is probability. The probability of that is quite low, okay? And number two, the expectation is that we continue higher even if we see these short-term corrections into 89. But here's the big thing. This is still a level of resistance. So short-term pullbacks, if they're going to develop, they are very likely going to develop from this region. If we break through this region, it is likely we see the continuations into 100 and potentially higher. But if this area acts as a strong enough resistance, which does not break, we will decide to break through 89 or, of course, 93, and whichever of these regions break first will determine the next leg up. So just as we had that consolidation at 89,000 and our lows at 76, the breakout resulted in a continuation to the next level of resistance. We have now got our resistance at 93.6 and our support at 89,000, and the break of 89,000 results in a continuation lower, and the break of 93.6 results in that continuation higher. So all in all, guys, the price action has seen a fantastic breakout. As we've been expecting for a long time now, a break of 89,000 would be a volatile move toward the upside. We are seeing short-term exhaustion. We are seeing the price action retest a key level of weekly resistance. We are seeing the buyers slowly start to dissipate here on the short term, and the potential for a pullback is becoming more and more apparent, particularly when we contextualize with where we are on the weekly chart in regards to prior historical resistances. Therefore, this is not a fantastic time to be aping into Bitcoin positions. The time was when we broke through 89,000. If we're taking a look at the 89,000 breakout, we had our strength represented by the break of the RSI. We had positive momentum, right? Positive momentum. While we have positive momentum, we have to apply more significance to breakouts on a horizontal and a diagonal level. These breakouts are more likely to sustain. So already, the fact that we had positive weekly momentum meant that the moment of which Bitcoin broke through 89,000, the potential for that price to sustain and continue upwards was greater than not, because the weekly momentum was positive. Number two, we had trend. The overall downtrend on the price action had been broken the prior week, again facilitating the chance for the buyers to develop a new uptrend. And number three, we had structure, which was of course the moment of which we broke 89,000 was a structural break, and you can see the exact candle that happened was a very violent candle representing a dramatic shift in the overall sentiment in the market upon the breakout of that prior level of liquidity. At the moment, we have now seen the price action retest resistance. We've got the potential to see these pullbacks develop. We've talked about what will happen in the short term if that develops. And the scenarios are, of course, that we come back down to retest. If we bounce, fantastic. We need to clear this prior high here to continue upwards. If we lose 89,000, we then run the risk of correcting lower again, and we know already that only upon the loss of the 50 EMA and the Gaussian channel upper band, as well as the 2-week baseline, do we expect macro downward price action to resume. Until then, we're playing it level by level, keep calm, and of course, trade the trends. Thanks for tuning in, guys. Have a fantastic day. I hope you all enjoy the rest of your day, and of course, we'll see you in tomorrow's video. See you then. Bye.